Good weekend, all. Ira Epstein with your metal market wrap-up, and this wrap-up is for Friday. This is your weekend edition. We'll look at the weekly charts for this May 10th, 2024. So, wow. Crazy week, but you got a wild week coming up now. You're going to get PPI on Tuesday, U.S., from the different S&P and the other services you get them from, and CPI numbers. So now we got to take another look at the markets and go through the inflation craze again. Here's how I'm viewing this in the most simplistic of terms. It's a dangerous time to be in the stock market, indices, if you're a trader there, and probably the dollar index, because that'll impact the others. Why do I say this? Because that is going to say, as the Fed stay higher for longer, or we have enough of a weakening between what we just saw in recent jobs and this, that the market, you know how it will be, it'll run with the idea the Fed's behind the curve, they got to move faster, and they got to begin in September at the latest if the numbers come in weak. You tell me which way they're going to go, and I'll tell you the reaction that you will initially get in the market. Now, there's always a lag effect. You know that, because the market will do it, and then everybody thinks it through, and they go back through. But I don't think I'm wrong in what I'm telling you. I think I'm very right in the sense that these two numbers now set us up for the jobs report at the end of the month. But think of when they're coming out. You're mid-month. You got 2 weeks before you even worry about that in theory. You go back to your normal trading. Obviously, we're going to see in the metal markets constant impact from the situation between Israel and Hamas. All right, that isn't going to change. If anything, it's going to get a lot worse. Israel has now divided Rafah, and they've encircled the area that they want to attack first. And I'm sure by Monday we'll have seen that they're probably in there right now, going into the tunnels, blowing up what structures remain in that area. And the people are on the run. Even the U.S. Is saying there's probably more than 110,000 are now out of that area. So the people are running. They have nowhere to go. There's really no aid coming into the country. There's no fuel coming into the country. It's a disaster every which way you look at it. And it's just a darn shame that you can't get Israel and Hamas to find a way. But history shows way before you're born, way before I'm born, way before all of our ancestors, until you go to biblical times, this just doesn't work. We can only hope that there's a breakthrough, look for the big boy up there or girl to help us out. All right. So when we look at gold, here you are up $72 for the week. That's a monster move. You're up 3%. In gold terms, that's huge. This is an all-time high close. End of discussion. Nothing more that you can say about it. You're now questioning, are you going to get up to the all-time high price? There's a difference of $23.98. Well, let me say it the right way. The all-time high weekly close. Monthly close, weekly close is different. You can have that close, and I think you understand it, on a weekly basis, you can finish higher than on a monthly because you can get a correction and the month ends a different way. So that becomes the question there. Here comes the market back for these highs. That's the way you look at it. You've got the pattern back in place of higher lows, higher highs. Unless the market comes back through 2285, the trend in this market stays to the upside. You're over the 18-week average. You're over the 100 and the 200-week averages, and they're all lined up bullish. They've been this way a very long time. Once you get the shorter term, the 18-week over the medium, the 100 over the 200, you got bull market conditions. So where would the resistance be? My good friend, the Bollinger Bands, and they're right here. So yes, you ran the bands, you corrected down, and I said to you last week, the first correction likely gets bought by the pros. Now, do you keep the embedded reading? And you've got it. Now, just take a look. Both numbers over 80. Both numbers over 80. Nope. Both numbers over 80. Both over 80. And both over 80. So you're going to say, but it lost it. Take my course. You'll understand what happened there. So this was a bear trap. And until it loses it again, once you lose it back to back in a short order, then something else is happening. Till you lose it again, they caught the bears last week, and now the market's fully back into the bull mode. You still have the silver market underneath the gold on the weekly basis. So you got as high as what here, the 90.50 level, and you're coming back down now and you're at about 84. So you need 6.5 ounces less of silver to get an ounce of gold, and that makes silver stronger. The silver chart, higher lows, higher highs, but it never embedded. Gold is now, from a pure technical point of view, because of the embedded reading, stronger than the silver. Not in the ratio, but the chart-wise one-on-one, I'd rather be in the gold. In the copper market, you just keep running this. We talked about it, and I think I mentioned to you at the beginning, probably February, March, that I thought that copper would be one of the best commodities, and I gave the reasons. Let me restate them. If economies start cutting rates in June, as we hear they will, it could be Europe, it can be the UK, it could be, once they get going, is it going to be other parts of Asia that do more things? You've got plenty going on. Eventually we will too, to get ahead of the curve, but we're not there. We'll probably be one of the latter ones. But why do you do that? You do it to spur on the economy. If you spur on the economy, your industry is going to come alive. We already saw that Germany's starting to see a little bit of a turn, which is good news. Now, when industry comes alive, copper comes into demand. What's the other thing we know? The supplies of copper over the next 3 to 5 years on a basis for demand are supposed to keep shrinking, according to copper consoles, everything that I read, mining reports, and so on. So the market is realizing that the next move, and yeah, there'll be corrections, but the next move is here. You're in it. This formed your base. And why not go up towards that $5 level? On a relative basis, it's cheap for a metal that's used in practically everything in industry. It's amazing when you think about it. The platinum has been a surprise. Is this going to be a base in this market? The weekly chart is saying, let me explain it. You closed at the very high of the week. If you can make a higher high than this and close over that, close at the high of next week, not the tip, but the top 20% or whatever the weekly range is, before you get back under these lows, I contend this will be a base and you're going to move the market higher. So I'm seeing in the metal markets, they're responding to two things. Still, we have inflation. We don't know in the U.S. how that's going to go. Is it going to be sticky or not? But we're seeing in other parts of the world, inflation is falling to the point where the banks are considering those cuts. And here too, another metal that they need. In the dollar, you're going to be fighting CPI, PPI, Tuesday and Wednesday. It's actually PPI, then CPI. Be careful here. You lost the bullish embedded reading on the close. You can get a bear trap if the market takes off and closes this week and regains it. But barring that, this market's saying it wants to go down to 104.67, the 100-day average. It could go to the 18, but the goal is the closest main moving average. Okay, so we're through with that. That's pretty cool. So we got everything in there that you can see. So how do you play this? What do you do? How are you going to look at it? Let me bring you up to date with what I do for you through this, and if I can get that to work. There you go. In the mornings, I start at 6 in the morning, Monday through Friday, and I record in the futures markets charts that look like this. There'll be 40 some odd of them. I walk you through and teach you as we're going through it. You're looking at moving averages, Bollinger Bands, window envelopes, slow stochastics. I use 5 different indicators, and the 5th one is the swing line, the yellow one you see whipping around. I explain them. I teach them each morning. I then get you also the fundamentals. So every morning we start out, well, what happened around the world? We go through it. You'll have 2 videos if you take the combo. You get it 6 a.m. roughly, I record the futures. About 9, I record the spider. And then our member login, they're like this. You also get a piece of software for your phone. So whether you have an Android or an iPhone, You'll be able to play it, get quotes, get everything. You'll get notices. It'll buzz. You just go to your phone, open it up, and you can play the video there as well. A lot of people do, and they seem to love it. Just remember, when you've got a phone, you got to be in an area with good connection. That's all. It'll work off whatever way you get it. 40 plus futures charts, weekly, daily, mixed in. All my indicators in there, plus free access to my special reports. Now, you know I'm going to load up on special reports this week coming. I was waiting this week and I kept fighting with myself. I needed to get through the USDA report on grains. That's out of the way if I want to do a grain report. And now the big boy reports, the PPI and CPI, so I'm going to do something with those two as well. And then I'll be doing the same in the ETFs. This is a big week for me to do a lot of reports. All you have to do is go to iraepstein.com research. Pretty simple. Or move your cursor to the top here. That'll do it. And if you have a question, you can always call my staff. In the meantime, you have a great weekend. Hope you watch the other videos. If not, I'll see you come Monday morning. You take care.